Hello and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We're both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. Please contact us by email. Our email addresses are at the bottom of your screen. There have been a lot of announcements recently that have an impact on family investment companies, or FICs, PICs, personal investment companies. So this week we thought it would be a good idea to have a little refresher on the subject and to think about where we currently stand. But before we get started, let's just remind ourselves of what we mean by a PIC or a FIC.
Yeah, so essentially, PICs and FICs are really just companies being used to hold personal wealth. They often have things like different classes of shares, which means you can separate ownership of assets from control of the company. But it's at its simplest, a PIC could just have a single class of £100 ordinary shares and be used simply as a wrapper to hold your investment portfolio. So no great magic to them. So with that out of the way, Rachel, what's changed with FICs since we last talked about them?
Well, there have been a couple of changes, Andrew, and the first one is a good news story. HMRC have announced that they think FICs are absolutely fantastic and absolutely everybody should have them.
Wow, really?
Okay, well, maybe that's not quite true, but what has happened is that HMRC have completed their review of FICs and they have concluded that there is no correlation between taxpayers having a FIC and tax avoidance. So from HMRC's perspective, FICs are just like anything else and it's business as usual.
That's really good to hear, although to be fair to us, it is what we've said all along. Still, I guess it's nice to have the HMRC endorsement that there's nothing dodgy about using a FIC. And hopefully that should also mean there are fewer questions coming from HMRC in future because they've just got a better grounding in what's going on now. On the other hand, there has been another announcement that's less encouraging for FICs, I think. This is the increase in corporation tax rates from 2023, which are going to go up to 25% for some companies. And that will include all investment companies such as FICs and PICs. So once that increase kicks in, FICs will actually pay tax on capital gains at a higher rate than individuals will, if we assume that personal CGT rates stay at 20%.
That's absolutely true. And let's not forget the increase in tax on dividends, which will be paid by individuals, which is a result of the social care levy increase being applied to dividends. And in practice, this means a tax increase of 1.25%, which individuals will pay on their dividend receipts. So it does beg the question of whether we should still be using FICs at all. And even, should we be winding up existing arrangements? What do you think?
It's ironic a bit, isn't it, that we reached the point where HMRC get comfortable with the use of FICs just at the stage where you're reasonably asking the question of, do we want to use them at all? I think, though, to answer the question about should we get rid of all of our FICs or should we carry on using them, you do need to distinguish between short-term and long-term thinking. And I think it's also really important to focus on the difference between the tax and the non-tax benefits. So clearly the short-term tax benefits have been eroded. I think it's not fair any longer to say that using a FIC really reduces the overall tax liability on your investments compared to personal holding. There are some benefits around the edges, but there's not really that much in it, I think. On the other hand, the estate planning benefits remain. So you've still got the ability to pass wealth on really tax efficiently to family members while you keep control. And most of the people I talk to about FICs, that's a much more important issue to them than short-term differences in tax rates.
That's true. And if your only reason for using an investment company is to benefit from a lower tax rate on investment growth, I would definitely be reviewing the position. But if the focus is actually long-term estate planning, nothing's really changed, has it?
I totally agree. And I think I'm certainly still talking to clients about FICs as family wealth planning structures, long-term structures that are there to hold wealth collectively, to grow it for the benefit, not just of you, but of future generations. And actually that leads me on to another thought, which is the interaction between FICs and capital tax treaties. I don't sort of want to repeat myself here, but we have spoken previously about the fact that if you are from what you called the Fab Four countries, India, Pakistan, Italy, or France, then with appropriate planning, your non-UK assets won't be liable to IHT on your death, however long you've been in the UK. And that gives rise to a really nice tax hack relating to FICs. So if you set up your FIC outside the UK, but have it managed in the UK, the shares you own will be non-UK assets, even though the company is the UK tax resident and fully compliant with its UK tax obligations. So that means, let's say if you're Indian domiciled, if you put your UK share portfolio into your Jersey incorporated company, the whole value of that share portfolio immediately disappears from your estate for inheritance tax purposes, because you own shares in a Jersey company, not shares in UK FTSE companies. And the real beauty of this is that, well, firstly, it's really simple. And secondly, if the law changed in the future, you'd be no worse off, because today you own UK shares, put them into the FIC, they go out of charge to tax. If something changes, the worst that happens is those shares come back into the charge of tax. So it's a really sort of neat solution if you are in one of those sort of happy domicile positions.
So actually, overall then, I think what we're saying is that PICs and FICs can still be really useful. It is, though, important to understand why you're using one, and they are definitely long-term structures, but in the right circumstances, they make an awful lot of sense.
I think you're absolutely right. And on that positive note, let's move on to this week's recommendation.
Well, I have one for you this week. I've been enjoying the BBC One series, which is called Vigil, and it's set on a submarine. It's got mixed reviews from the critics, but I would say give it a go if you've been put off. So it's written by the same writer as wrote Line of Duty. So if you liked that, you'll probably enjoy Vigil, because it's got plenty of plot twists. And again, it's focused on a bit of a conspiracy. So there we go. That's my recommendation for this week.
Fantastic.
As ever, thank you for listening. Please let us have your comments and feedback. And as we've said, our email addresses appear at the bottom of your screen, so we are easily contactable. Bye for now.
Bye.